right, are we there? Are we live? What's going on? Let me pop the chat. Welcome to Forex.Today. It's Friday. I slept 4, maybe 5 hours, so it's a good day. Yeah, I gotta load chat. Hang on. Gotta load chat. Don't know if anyone's here. Don't know if I'm streaming. Don't know what's going on. I'm liberated up here. So hang on. Yeah, it's not loading. What's going on? It's not loading. Excellent connection. Nobody's watching. I don't have chat. My stomach's gurgling. Hang on. Just waiting for YouTube. I'm waiting for YouTube. So, I'm just getting spinning. Spin, spin, spin. Spin, spin, spin. Spin, spin, spin. Spin, spin, spin. I have no chat. No chat. No nothing. Spin, spin, spin. Eventually it's going to kick in. I know it. I can feel it. I think it's all good. So why don't I just pretend something's happening, that someone's watching and somebody can hear. So good morning. Welcome to Forex.Today. It is Friday. That's a good time to be alive. That's a good time to be healthy. It's a good time to be happy. And it might actually be a good time to trade. So we will go through the dollar pairs, yen pairs, Swissy pairs, gold, oil, Bitcoin, whatever you want. You're the boss. I'm just a humble currency trader. I've been doing this 20 years, but I'll let you steer the ship. So welcome. I'm glad you're here. Be involved. I call it participation. Participate and take action with these webinars, right? Be a positive influence on our community and me, because if I don't know you, I can't flow you. So get involved. I need to know, stay close, and be kind. All right, so I'm pretty sure you can hear me because I think YouTube just told me that the webinar is up and running. Good. Awesome. Yeah, so let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. So good to see you. Thank you for being here at Forex.Today. Our sponsor is TradersWay.com. Therefore, these webinars are not costing you money, but it does come with a cost. You have an obligation to go to TradersWay.com, open up a demo account, check out the back office. It's clean and well organized. You can download MT4, MT5, C-Trader, I think a couple of other things. Also, you can have an ECN account, a fixed spread account, a variable spread. I like the variable spread, always have. You can have it your way at Traders Way, any way you want. Cool thing is, if you ever need it, world-class customer service. When you click the button on a trade, it executes fast, faster than most. I tested that with a third-party software, but I can't remember what it was. But anyways, it was one of the fastest actually in the entire market. And the big boys with the hundreds of thousands of clients, they're actually quite slow. Maybe they're slipping you, I don't know. But the execution at Traders Way is fast. The spreads are very competitive. The swaps are amazing. And of course, they make this community possible. So thank you, Traders Way. Visit tradersway.com today. Pay it back. That's what this world works on, by the way. Karma. Karma. Be good. Be kind. Do what's right. Do what your mama taught you. Pay it back. What's up, Sammy? Sam Z. Okay, so anyways, I apologize right off the bat. I haven't slept very much. I don't feel very healthy. I apologize. I know it's a lame BS excuse, but there you go. So today, we will go through the charts. Guten Morgen, or Guten Morgen, depending on where you live. What are we looking at? Kitty cat. This is what our plan was for the week. We're still here. Yeah, I don't think it's this. I'm just doing. I'm doing some big business deals. I'm in the middle of school. There's other things I need to do on the family side, and there's things I need to do with the FX Bootcamp side, and there's just crazy. Okay. An says plan for next week. Oh, you should already have that done. Okay, this is Friday. If you don't know what's happening next week, spaghetti-o. In fact, here's the interesting thing. If it's Friday and you don't have Monday and Tuesday planned out, you probably have already missed it. I'm not joking. Have you ever wondered why I do my live trading group, my swing trading group? You ever wonder why we meet on a Thursday? It's not convenient for me. In fact, it's very, 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 very inconvenient for me. It's very inconvenient for me right now. It's not a complaint. I'm just saying it's definitely not like, oh, well, the only time I could really meet with the swing traders is Thursday. There's a real reason. And that's because we're planning out next week. And very often you have to take Monday's trade, right? The move you see on Monday is set up today. So that's what it's all about. Huh? Yeah, this, boy, oh boy, oh boy. Hang on, I got clients banging on my door. Anyways. Oh, man, I gotta see this. Interesting. Anyways. All right. I like your concept of front running those setups. Thank you, Master Trader. Master! Yeah. Yep. It's I love the idea of my concept. Yep. I don't know if it's truly my concept. It's just how to trade, right? So, I'd like to think I don't make this about me. I know I get criticized a lot for being arrogant and stuff. That's my confidence, not really arrogance. I've been humbled enough. But confidence, right? So when I look at things like this, it's not my methodology. And I know I'm picking on the word choices and you're just typing in a chat and stuff, so it's not quite fair. But I'm just trying to teach you how to trade. This has nothing to do with me. This is just how to trade. Okay, so anyways. So I'm looking at this, and so far, no good. Just so far, nothing. We have an S1 bottom. We haven't even made it to R1 here. Maybe next week we go down to here and we kind of fart around there. But for that, we need oil to go up. I'm not sure if oil's going to move that way. Oh, thank you, NP. Got to write a new one someday. I'm like 3 weeks away from wrapping up my master's degree. I don't know if I can get through it. I think I'll quit. I was thinking like, oh, there's so much I want to do. Oh, I want to write a book. Yeah, but anyways. So anyways, what do you think of this chart? That's monkey brains, huh? Look at that. Crazy. Monkey brains. So, okay. So it's just kind of, yeah, I mean, it makes sense that we're farting around here, right? Like, no one wants to take the next move. But for this, we need oil to move up. So, hang on, I gotta move my camera. Why does Forex bring me so much pleasure and so much pain? Oh, oh, oil. I guess I'm on the wrong one. I don't want that. I want this. Yeah. Well, Peter, were you in grad school for 4 years? That's the other thing. Who's gone through a 4-year MBA program? You know, like 4 years. That's the craziness of it. Okay, Bitcoin. Certainly would have been easier just to move to campus and live there and bang it out in 2 years like a 25-year-old does, or a 30-year-old. But I have a wife and kids. I can't move away for 2 years. You think Harvard's expensive? How about divorce? The two quickest ways to go from rich to poor in the United States. The quickest. The first one is cancer. The second one is divorce. If you can get through those two things, you'll probably retire well. So anyway, so Peter, I did the 4-year route at Harvard, and let me tell you, holy smokes. 4 years of no summer vacations, for example. All right, so I'm just looking here, like, how do you feel about this? Is this definitely going up? Well, it is going up, but it's been a while since we've had a higher high. Well, the interesting thing, Peter, I generally don't have nightmares. But what I do, and I did a little bit of this in the 4 hours or 5 hours I slept last night, like my mind works on problems that generally can't be solved. Sometimes I'm actually working on problems that can be solved, and I have done complicated algebra in my mind while sleeping, like no joke. But like last night, I'm like, this has to go there, but then that has to go there, but this has to go there, but that has to go there, and you do this for hours. But there's something missing. There's something I can't find. There's something I can't do. But what if I do this? Oh, but then that, and you just work on this circular problem. Now, if you were Microsoft Excel, you just go, you spit out an error. You're like, circular error. This can't be done. Stop worrying about it. Stop thinking about it. But my mind will just do it. So I'll sleep, let's say 6 hours, and then I'll wake up and I'm exhausted. My mind is exhausted. It's been working for the whole time. And I'm like, no better off. I'm still mentally slow. At least you're not so physically, tired. But mentally, like, got no sleep. All right. Cool. All right, so how about this? Gold. Everybody's talking about gold. Gold, gold, gold. All right. Okay. Couple of things here. Breakout, pullback, breakout, pullback. If you were a buyer, it's sort of an OOP situation here. Gold is a good trend. Yeah, that's fine. It's just a little late in the process, guys. I think you should have been a buyer much earlier. But if you follow the rules of engagement, here's a London Open move for you. Breakout, pullback, roll, reversal. This one's pretty easy, right? You're basically buying it at 1750. That's funny, Peter. I don't know if that's funny or not, but yeah. Okay. So one of the things we talked about in the live trading group last night is like, if you just do your job, this takes, 8 minutes a week, 8 minutes a day, right? If you have proper trade plans, you know what you want to do, you know what price you want to do it at, and you even know when. Okay? And one of the things we're working out with the live group is the psychology of handling your success. We didn't even talk about entering a trade last night. We discussed how difficult it is to manage your success so that you can maintain your success. But we're like, the trading part is easy. You know what you want to do, you know the price you want to do it, and you know what's going to happen, when it's going to happen, right? You know you're going to be at your charts here, so you're ready. And you're like, oh, there's my price. Click. Done. Oh, look. Right? London Open. Oh, right off my price. Boom. Done. Oh, look. Right off my price, right? London Open. Done. And the cool thing is, if it doesn't work that way, you don't trade. So it's awesome. Okay. A master trader, there's no trick to it. You just trade. Okay. That's why I don't make a big deal like if you're 7 for 8 Julie, right? Hi, my name is Julie, 7 for 8. Wasn't there see, I don't watch TV, but my friends used to talk of like 7 of 9 or some Star Trek show with a pretty cyborg or something. A beautiful android. Anyways, I mean, this is good if you're learning how to take control and you're really trying to be precise when, in particular, when you're practicing. Okay? And maybe that's really great, like when you're Tiger Woods and you've been the world's greatest golfer, you know how to golf, you're still a pretty good golfer. And so you go to the driving range and you're like, okay, this is going to go low and then it's going to go up and drop softly. And then you're going to hit another ball and you're going to shape it left. And then you're going to hit another ball and shape it right and all that kind of stuff. And you're practicing all these things and you'd like to shape 10 balls in a row, right to left, starting low and ending high, which is like probably the most difficult shot you could probably do. But you've been practicing it and you hit it. And finally you can get 10 in a row. Cool. But then you get out on the course in the middle of a tournament and you got one shot, not 10. And it changes, right? But if you can't do it for practice, you might not do it for real. And so you need that muscle memory. Yeah, it should, Julie, right? And a lot of people have that, especially in the beginning. I forget who here asked, but someone here asked, I don't know, maybe a year ago, they're like, Wayne, I'm having trouble pulling the trigger. And I'm like, really? Watch this. I pulled the trigger. Hey, man, that's the easiest part. Pulling the trigger's easy. I love pulling the trigger. I love losses. I love taking losses, I should say. I don't love losses. I like taking losses. It's the greatest feeling that trading offers, I think. To get out of a bad trade before it's a horrible trade is fantastic. What an amazing feeling. Anyways, so this is OOP. Like, we know all these things, but let me be Captain Obvious here. This is OOP. Okay, and you're supposed to ride the 21. Right? FT9, if you don't, then you need to do all the training courses, and then you need to join the live group, and then you need to go through performance coaching. How do you know when to enter? That's what you have to learn. Okay? We get very precise. We get very precise answering that question. Very precise. In fact, painfully precise on how to pull the trigger. So, anyways, anywho, this is an OOP, riding a 4-hour 21, very cool. Decreases if oil rises, doing a cross. Cool, you can do that if you want. Okay. The flip side of this analysis is, does this look bearish to you? Cray cray. Yeah. So see, guys, like, think about it. If you're struggling, you're like, oh my God, I really struggle knowing how to pull the trigger. Then you need to sign up, take the courses, and then join the group, and then get performance coaching. We solve that. So we work that so hard into your brain that it's painful. It drives you cray cray. But you'll come out the other side of a successful trader. But the answer I can't just give you in 1 minute. You're going to have to learn it over 3, 4, 5 months of you working your ass off. It's funny. It's not something that could be told or shown. Like, we show you, obviously. But there's a different aspect of the personality. Like, you need to go through and do the work and hustle. Like, really focus on your I mean, right? Like, not just sitting in your front of your charts trading, but training. Think about it. You're like a prize fighter boxer, right? You understand? You're like a boxer. You train for 9 months, and then you fight for an hour or less. $1 million push-ups, boom! Someone hits you in the face. Boom! Right in the kidney. Do you have what it takes to fight back? So it's a lot of training and a little bit of trading. Okay? How do you go? Bang! Right in the kisser. Don't! Anyways. Yeah, so that's the funny thing, guys. If you're struggling with that, then man up. Girl up. Join the group. Whatever. Oh, but it costs money. Then don't join the group. Oh, he's just selling me. Okay, then don't join. Whatever. All right. So, also, okay, also, I had to, I didn't exit this one. Which one did I exit? Where am I? Let's get off. Well, should I do Bitcoin first? Anyways, we're on the daily 21, if you can see that. So a bull is recognizing this 39. So I don't know if you're doing that. Gold, we did. Bitcoin, still stuck there, so nothing's on Bitcoin. Pound dollar, stuck at the target. Like, here's another classic one. You should have been done yesterday and walked away. Euro dollar, I guess maybe we can do this for a second. Okay. Wow, pretty amazing. So here we are on Friday. This is Friday last week, and this is this week's buy zone. Do you see what I mean by, if you show up on Monday, you've probably missed it, where if on Thursday and Friday of last week, you would have been a buyer here, not because of last week's data, because of your projected data for this week. This is what I mean by front running. This is what I mean by if you don't, right, if you haven't planned on Thursday, let's do this different color. I say if you haven't planned Thursday or Friday, or Friday. On Thursday and Friday, you're planning on what you will be doing the next week. Monday, Tuesday, Wednesday, Thursday, Friday. So that's what I mean, like by today, you don't even have a trade plan for next week. You've already lost. That's what I mean. Meaning, on Friday of last week, you should have been a buyer based on Monday. Okay? On Thursday or Friday, you would have been buying euro dollar, not because of what you see on Monday. You'd already be in on Monday. This is sort of your last chance. You get it? So like, look at this. This is next week's buy zone. Oh, you didn't buy it? Okay. So someone else is going to show up and say, oh, it's out of OOP. It's out of position. I guess I should do something else. Or really, if you're a bear, here's the other thing. If you're a bear, this is what your plan is on Monday. So it comes down to your bias, right? So a bull's already bought it is what I'm trying to get at. And a bear is thinking this for next week. Which one's right? Yeah, I don't know. But the time and price is what technical analysis is. That's all that technical analysis is. What time and what price? And by the way, there's no ambiguity around when London opens. There's no ambiguity when the day starts. There's no ambiguity at London close or New York close. I mean, you know things. You know exactly when the news events are going to be. There's going to be news at 8:30. There's going to be news at 10. Okay? So you know a ton of things. But if you show up, you're like, hey, what's going on today? What are we doing? Are we going to... lost. Fail. Fail. You're not even using your charts right. You don't even have the concept of trading right. Right? So, trying to wake you up anyways. So, if you were a buyer of euro dollar, this by definition, by the way, not by opinion, by definition is support. Bulls buy at support. Great. What's the plan for next week? Great. Well, what about statistical analysis? Well, this was 95% oversold, and you're a bull, right? You're a bull. You're a bull. You got a 95% discount in an uptrend on this time frame anyways, and you didn't like buying it. Oh, I can't buy that. I'm looking for a 96% discount. You don't even know what you're looking for. Oh, I'm spinning. Oh, I'm spinning. How quick my trades can drop away. And now my bitter hands beneath the broken cloud of what was everything. Oh, a trade gone bad, turned my world to black, tattooed all I see, all I am, all I'll ever be. Yeah, just nothing but bad trades and sorrow. Bad trades and sorrow. You have to do that. You have to do that. And then someone else will look at this. Wayne, I don't think it's going anywhere. Okay? Well, I'll remind you, the Monday one, here's what, you can go back and watch the video from Monday if you want. Because I know it's there because it's in my brain. If you're a bull, you have to decide, are you buying that or are you buying that? Yeah, totally on. Had not enough sleep. Yeah, Master Trader, do you enter Thursday or Friday? Hell yeah, that's what I'm telling you about. Our live trading group meets on Thursdays so we can trade. We love pulling the trigger. But when we pull the trigger on Thursday, it's not because of what everyone else sees on Thursday. Everyone's stuck in the weeds. We see way out and we see what's going to happen in the future. And we say, well, we could use that. So if that's going to be our buy zone and we're there now, maybe we buy it. Maybe it's Thursday, maybe it's Friday, maybe it's Sunday. We don't know. But we're in the future, man. Right? Okay. So you need to know what team you're on, and then things simplify. So if you're a bear, this is what your plan is next week. It's not difficult. It's not complicated. You know the exact price, and you could probably figure out when. It's either going to be today, maybe London close, or it's going to be Sunday when the market opens. You're going to pull the trigger, drop it like it's hot, take a walk. Would I be looking for a higher high as a bull? Well, first of all, I don't ever care about higher highs. I care about higher lows. So if I'm a bull, and by the way, we did talk about this, okay? So you're really supposed to be in here. And I know you're frustrated with the market. That's how it happens. But anyways, there's that, okay? This behaved properly. This behaved properly. So it just comes down to if you're a bull now. And you're in this range now. And if this maintains, probably what's going to happen is you get something like this. And then we have to contend with this double top next week. Okay. Okay. If I'm a bull, I'm only interested in higher lows. Okay. Okay. And probably the thing I'm most looking for is lower lows, because that takes me up. Okay. In the stock market, Master. Do I do 10? 10 what? Hang on, let me zoom in. So let's get off that. I'm worried you get focused on the asset. I'm more focused on the macro, the market. Okay, so let me go back to this. I was trying to show you, and I don't know if you get it. I don't know if you get it. I don't know. All right. If you are a bull on oil, three things are going on here. Psychological level of 39, and it's not a lower low, so I guess you could put that as another one. So not a lower low. Remember, not lower lows take you out as a bull. So if it's not a lower low, you might not like the situation, but it doesn't change you, right? Whatever. It's okay. It's the daily 21, which is dynamic level of support. Okay. And it's the daily M3. You understand? Sorry, M2. Okay. So let me say it this way. You see this period yesterday? Wait. No, that's weekly. Sorry, weekly. See this last week on oil? Based on your analysis, let's say on Monday morning, right here, based on your analysis of the oil market, your technical analysis of the market, you're already a bull. So that means your fundamentals, you're buying oil. Great. So now your job with technical analysis is to say, at what price would I like to buy oil? Apparently you don't like to buy it at 41 or 40, but what price would you like? And you were making this decision on Monday morning, first thing. And you said, I would like to buy this at 39. Not just because it's a psych level, because it's at the weekly M2. Okay? So the problem is, most young traders, newer traders, they show up and they're like, what's going on today? And all they see is down, so they want to sell. But they don't understand, for 4 days, a buyer's been waiting to buy it at 39. And that's it. That's it. I'm sorry. There's no more magic. I just taught you how to trade like a banker. Yeah. Yeah, they had a trade plan. Yup. The inside knowledge, everybody. Shh, don't tell anybody. How do I trade like a banker, Wayne? Well, it's pretty good to have a plan. That's a good way. Yeah. My fear is you don't get how amazing this opportunity is in front of you. Like last night at my class, so because it's Harvard, we get great speakers that come in, right? So one of the biggest players at Bain Capital came in to talk about private equity. Unbelievably smart at what he does. He's put in billions and billions and billions of dollars per company that he's turned around, and you know these companies. And he's done incredibly well for himself. Like, you know, not fly around first class, but own his own jet kind of stuff, which ain't bad if you have a JOB. You don't take the corporate jet, you take your jet. So he's got that kind of, and he's right, smart, successful, and all that kind of stuff. And I look at what he does, and all the numbers are amazing, and I'm like, not interested. Not interested. Sure, that could be a success. And of course, he's one out of, I don't think private equity has 1 million people in it, but he's 1 out of 10,000. But he's one of the best, and he was smart and all that kind of stuff. And when I was in college, by the way, I was in a leadership program, and I didn't even know what an investment bank was or a consulting firm was. And some of the people in my leadership program that were grooming me, they're like, oh yeah, I'm trying to get into Bain. I'm like, what's Bain? A consulting company. And then I stopped asking questions because I don't know what a consulting company is. But they worked really hard. And I remember Bain said they only took people with track records of leadership. I mean, we're talking about a 19-year-old. What do you mean track record of leadership? So that's why these guys are in the leadership program. And they went all the way. They were leaders. They knew how to run an organization, a large organization, right? And anyway, so they fought tooth and nail to get in, and a lot of them got in, and they did really well for themselves. And it's really uncanny because that was, we're talking about 1992. So now this guy comes in, he's super successful, he's making tens of millions of dollars per year. And oh my God, it looks like one of my friends. Like it's not, but like they all look the same. It's amazing. These white guys, I get them all mixed up. They all look the same to me. So it's just really funny. Like they literally recruit a very specific type of person. So that means if you're not from an unbelievable school, if you right, if you don't have the right type of degree, if you don't have a 4.0 magna cum laude degree, if you don't have a leadership background where you manage not just hundreds but thousands of people, you're not going to get to work at Bain Capital. And even if you get into Bain Capital, what's the chance that they're going to put you in a position where you're going to make 100 million? Pretty low, right? You're like, I don't live in the right country. I don't have the right mom and dad. I don't live in the right neighborhood. I don't have an educational background. Or if I do, it's not like Harvard or something, or Princeton or Stanford. And even then, I didn't graduate magna cum laude, 4.0. And even if you did, you didn't get the job at the bank or consulting firm. And even then, and all of this stuff. Or you got these charts right in front of you, and you have a level playing field with this guy and guys like him, or gals like her, right? You have total access to a $5 trillion a day market, and you have no better edge than anybody else. Nobody's got an edge on you. So ask yourself, are you playing this like Fortnite? Is this fun? Is this a dream? Is this fun? Is this a dream? Are you playing around with this? Are you in 90%? Are you in 80%? Is this a hobby? I mean, I don't know if you fully get it. But when I see these Harvard a-holes, they're elitist, like, oh my God. Right? Like, I'll say it again. I was thinking about running to be on the board of overseers for Harvard, and I found out the head of the Federal Reserve Bank of Atlanta, in my own hometown, is running to get on the board. He runs the Federal Reserve Bank. Harvard's a liberal school too. He's an African American man and he's openly gay. I'm like, oh my God, there's no way they're going to pick a young white a-hole that runs a little currency fund versus the guy that runs the Fed. So how do you compete with people like that? You can't. The other guy, I only read the first two. The other guy runs Samsung Capital. I'm like, Samsung, he runs some... Oh my God, I have a currency fund. I'm a currency trader. I know some macro. I graduated summa cum laude. Like, you cannot compete with them. So you need to find your blue ocean. You need to find your territory, your turf. You need to plant your flag and defend it. It's Forex. You can do better. Because you look it up. I make more money than the guy that runs the Federal Reserve Bank of Atlanta. Huh. All right, he'll get on the board of overseers. Great. Have at it. It sounded really cool. If they offered it to me, I'd probably take it, but he's got that. He's got a better profile. He's going to get it. There's no doubt. There's no doubt. What a perfect profile to get on the Harvard Board of Overseers. Cool. I ain't got that. I got Forex though, and I have the advantage. This is my territory, my ground. I have my stake planted. I gave up a career in venture capital. This is a chance to have better, maybe an advantage over the elite, and certainly move your entire not just your life and yourself and the watch you have on your wrist or the car you drive, or it gets bigger and better. You're changing your lineage, your legacy. Your great grandchildren are going to live a better life if you handle this right. It's a game changer, quantum leaps above what you might be thinking right now. Okay? Right? Yeah. Shame on you if you slept more than me. Who wants it more? Let's go to the yens. Then, Mikhail, probably you need to change what you're doing. So, what did I do yesterday? I bailed on my yen trades. Huh? Huh? Whale oil B. I bailed on my yen trades. And I think it was here. Correct me if I'm wrong. I think it was in here. It was the 4-hour 21. I'm like, screw that. I'm out of here. Huh? Right? Bought it here. Exited here. On says, you need to sleep to be productive. Yes, I totally agree. But in the beginning, you need to hustle. Okay? I've hired so many people in my life. Hundreds and hundreds and hundreds and hundreds. Hundreds and hundreds. And it's usually the Harvard MBAs that achieve very little. Okay? They achieve very little. And it's the young entrepreneur, the young hustler that will do whatever it takes is the one that finds the success. That's the one I generally bet on all the time. I'm just going to Harvard because of my kids. I'm trying to be an inspiration to my children. Okay? So it's the young one that says, you know what? I am, not will. I am doing all I can. I can do. I am doing everything I can. I am doing whatever it takes. I am making sacrifices. Okay? That's where you need to be. And like I said, you need to be broke as a currency trader. Not only do you have to work hard, I'd say, like I said, a bare minimum just to show up to the game, just to get into the dance. You need to put in 5 years of hard work. And during those 5 years, be absolutely broke. Because every pip you make goes into your account and you don't trade, you don't spend it. You are not going to pay yourself for 5 years. You're going to be broke and humble and tiny and small, but your account will grow. And it's exponential, so it'll grow more in the last 6 months than it did in 4.5 years. Okay? Right? Here's your goal. 25 to 50. Year 2, 50 to 100. Notice you're not paying yourself. Year 3, 100 to 200. Still haven't paid yourself. Year 4, 200 to 400. And now you're like, ooh, this is getting interesting. Year 5, 400 to 800. When do you want to pay yourself? Never. Okay? Now the thing is like, oh man, that's doubling, blah. Okay, sure, it's never going to be this perfect or this smooth. I understand. Instead of fighting the idea, let me break it down. You made 6% per month. Month after month after month after month. Maybe you only make 3, maybe you only make 4, maybe you only make 5, maybe you only make 2. Let me put it in a different context. If you average 2% a month, you are in the top percentile of professional traders in the United States that focus on global macro and foreign exchange. You're one of the best. But you don't have any money. So you're like, right, I'm one of the best. I turned a $5,000 account into a $6,000 account. All right, great. Nice. You're not bankrolled. Okay? But at some point, okay? And then when you get to year 5, all right, give yourself $250,000. Right? Give yourself 3 or something. I don't know. Give yourself 300K. But then the problem is now, right? Now so I guess in the next year. So let's do that. Then you pay yourself $500,000 because you've deferred yourself. So you made $100,000 a year. And in year 6 you have $500,000, and you turn that into $1 million. Okay? So what do? Do you pay yourself 500? Or do you pay yourself 100 and you say, well, right now I'm only worth $100,000 a year? Or do you give yourself a bonus and say, well, I'm going to pay myself $200,000 a year? What decision are you going to make? So you're like, well, now I'll start with 8, and you're like, well, that's too much. All right, so you pay yourself more. See, the interesting thing is the less you pay yourself, the more money you're going to make. If you paid yourself 25 grand here, then this is going to be 75 to 150. Okay? And then what? You pay yourself 100 here? Well, now you're back to 50 again. So what are you going to do? 70. What are you going to do? Right? 50,000 again? All right, so now you're at 100. Right? And 200. All of a sudden, you're really slowing things down. And then what? Are you going to pay yourself again 100? You see? And all of a sudden you're like, well, then you're back to here. And all of a sudden you're not making any money. You're never getting anywhere. This is why you need to be rich. Okay? Right? So if you're not rich now, the way to get there is you don't need the money. So how are you going to get through 5 years worth of not paying yourself if you don't have any money? Does anybody know? And ideally, you keep your clothes on. You know how you learn how to trade. Okay? You understand price, you understand time. We call that price action or technical analysis, right? And you know the time of day and what days. None of this is magic. You know if you're a buyer or seller, you plan things a day or two in advance, you find out the price you're interested in buying, you know where you think it might go, you adjust for market conditions, you ask yourself, I'm a buyer, but is today a good time to buy? Is the market bullish today? Will it be bullish tomorrow? And you put all these together and you make trades and you walk away. That should be less than 1 hour a day. Because you know when to be at your charts and you already know what you want to do and you have a pretty good price, a precise price of where you want to buy. So let's say you're spending 1 hour a day as a day trader, market open trader, even a swing trader, okay? And you work at a job for 8 hours. and you make 25K at your job, and you got $472,391.72 in your trading account, and you don't touch it. Broke. You're broke. Okay? Okay? You're kind of like Apple computers sitting on $27 billion and not spending it. That's how they get rich. They don't need money. Yeah, put the whole thing offshore, Blue Boy. Do you add up? You don't need to. You know, make pips pay for everything. Okay? So here's how money works, guys. Okay, you have a starting. Maybe we'll do it this way. This is what's cool about finance, for example. Oh, you know what? I need to do it from here. Okay. What is finance, guys? Blank, I guess, is what I need. What is finance? What is finance? What is finance? What does finance study? The science of cash flows. Exactly. Okay? The study of cash flows. Okay? Now, if it was Latin, you would say philo, I don't know the Latin word for money, but the love of money, right? The love of cash flow, right? So anyways, so this is cash flow. You start with year 0. Okay, this is year. It's terrible. It's so hard without an Excel spreadsheet. Okay. How much money do you have in year 0? It's obviously a finite absolute number. Okay. So you would set it up year 0, 1, 2, 3, 4, 5. And somewhere else you'd have inputs. So you have your starting capital and your compound, your rate of return. Okay? And you wouldn't do IRR. That's for silly venture capitalists that are trying to hide the fact they're losing most of their money. Okay? So this is your percent return, and then, of course, the number of periods. Okay? And, of course, the starting capital is present value, 6%. So that you could probably use a payment function for this, right? Anyways, we don't need to get in the formula. But all that matters in the world is the starting capital, the present value of the asset in year 0, the discount rate, or in this case, the rate of return, and how many years. Okay, this is very standard, very basic cash flows. Okay, so if you start with 25K, compounded at 6% over 5 periods, it's going to spit out a number. And that's it. It'll equal something, $800,000. Okay? If you start with a different number, the answer, it'll spit out a different answer. If you change your compounding, it will change the number that it spits out. If you change the number, okay, 7 years, it'll spit out a different number. So one of the most important things that I'm trying to get at, or I guess they're all important, the amount you start with is key. In 5 years, if you start with $1 million, in 5 years, you're going to have a lot more money than someone that starts with $1,000. And it's exponential, by the way. Not 1,000 times better, exponentially more money. There'll be a trillionaire and you'll have 100 grand. They'll have a trillion, right? Because they didn't pay themselves and they kept making billions, and then they turned billions into tens of billions, and they turned billions into tens of billions into hundreds of billions. Then they're like, you know what? I'm still not going to pay myself. I'm going to turn hundreds of billions into trillions, right? So, anyways, but that's all it is. It's an input, okay? So you input this in, and 1 year passes at the end of 1 year. If this is 25, okay, and this is 6 per month, of course, then what? Because really it's 72 periods times 12, but whatever. So anyways, at the end of 1 year, you'll have 50. At the end of year 2, you'll have 100. At the end of year 3, you'll have 200. At the year 4, you'll have 400. At the end of year 5, you'll have 800. Okay? It's just cash flow. And you need to manage your inputs, if you will. Okay? So you need to find comfort in something steady. I don't recommend that you do 30% and then 12%, and then you have a 52% year, and then you have a negative 22. That's called volatility. What you want is to offer someone a steady stream of cash flows that's higher than comparable returns, because they have opportunity cost. If they give it to you, okay, if they give you the money, they're saying, well, I'm looking at a real estate deal that's offering me 15% per year. Okay? 15% per year. And you're like, well, I'm doing 100% per year. Who wins that game? They can invest into an illiquid asset for 10 years, not be able to get their money out, and make 15% return on cash flows. Or you trade their money, keep them liquid, and you make 100% a year. To say that differently, you make 6% a month. Now you might say, well, dude, you don't need to make 100% a year. How many people agree with that? How many people agree that you don't need to make 100% a year? So therefore, change your attitude. Because some of you guys are trying to make 27% a month. And you're wondering why you fail. Because you're mentally deranged. You don't have any money, so you love the high rate of return. Well, someone with money would think that that's stupid. You have, right? You got nothing to lose, and you can see it in the trading history. So instead, why don't you knock this sucker down to 3? Can you do 3% a month? Well, apples to apples, that's an apple. The best is doing 2%. So you think you can do 50% consistently better than the best? Right? That's the bad thing, right? KG is like 17 pips a day. Yeah, if that's all your trades are worth, you should stop. I don't know. Okay. But what we're trying to do, guys, is what if you only got 25K? What if you only have 25,000, right? And the best in the world's doing 2, but you're trying to do 3 now. So we just got you conservative. You're like, oh, Wayne, now in that context, 100% a year is stupid. So why don't we try for 50% a year? Because that's only like 322% better than other opportunities. Okay, so now we're going for 3% a month, which is only 50% better than the best there is in the industry. Okay, but now what's happening? You end up saying, well, at the end of years now, okay, your cash flows are going to change because you've changed your rate of return or your comp rate or your discount rate, or there's so many different terms for it. But now you're going 50 to 75, 75 to 150, right? What is this, 225 or something? And like you're half as much money, of course, right? And then you could cut this even lower and say, well, I could just be a little bit better than the best, right? But what's changing? Eventually, if you're focused on the consistent returns, and then you're like, but it doesn't pay me any real money, right? Then what you need to do is change your opening number. How do you do that? You can show somebody that has excess capital that needs to be deployed, because rich people don't have any cash. I hope you understand that. Rich people don't have cash. They have assets. They're always, if they get cash, they have to get rid of it right away. They understand money's worthless. Okay? So if you can show to someone with money, let's get rid of this. If you can show someone with money that you can produce 3% a month, month after month after month for years and years and years and years and years, the markets are up, the markets are down, the markets are freaking out, the markets are complacent. Either way, 3%, 3%, 3%, 3%. Then one day they give you the juice. Right? And that's where, if you don't have any money, you probably need to be thinking about that so that you can actually speak to someone with money. And then they say, okay, well, all right, kid, I'll give you a shot. I'll give you, right, 250K. You turn that into 400. Then you turn it into 600. Right? Then you turn it into 900. You turn it into 1.2 M. Okay. Problem is, you only get paid 80K. You only get paid 120K. You only get paid 180K. Right? For that year. Okay? You only get paid 240,000. Client keeps the rest. So what do you tell your client? Don't take the money out of the account. You need to grow it. Let me show you the magic of compound interest. Keep growing it. Let's get this sucker up to 1.8, and then let's get it to 2.5. Okay? Meanwhile, you're always withdrawing your 20%, right? Okay, but you see what I mean? I'm trying to get you to focus on this like a business person would. Okay? Has anyone actually done the spreadsheet? I forget if you use the payment function on that. Does anyone know if that's right? Where my MBA's at? Is that the right? Does anybody know? I don't know. I guess we can just bang it out. Okay. What did you do? I'm just seeing if the math is right. Rate of return. And what else we need? Years, right? Periods. So what did we say? 25,000. Rate of return 6%. Oh, that's monthly. So years. So we have to do periods of times 12. Well, let's do 12 months and see what happens. I think this is right. So you have what? Year 0, year 1, year 2, year 3. Oops, come on. Can't look down. 2, 3. Gee whiz. I'm not doing this right, and I know it. 4. Usually. And then we'll do 5 years. I don't think we're going to go that far out, though. But let's say that's why. Gee whiz. All right, whatever. So you're starting here, right? So the thing is, I have to compound this by 12 monthlies, right? So I think it's if I get me right, it's payment, isn't it? The rate of return, number of payments. So this is 12 monthlies compounding at 6%, and the present value of your starting capital. I think, is anyone checking it? Yeah, it's a negative payment. Yeah, I didn't think so. Yeah, my math is messed up there. Somewhere, oops. So maybe the period is just 1. So let's do this different. Let's see if this works. Payment here is, number of payments is 1. But that's not right either. How come it's not working? I'm messing it up. Years, it's not 1 year. 25. Compound. Oh, wait. Okay. All right. Hang on. Okay, hang on. Let me just start this over. Equals the payment function of, okay, the rate we know for sure. Okay, I got that right. Good. The next one is the present value. Oh, so I was doing 12 months. So what am I doing? If we're doing it by year, it's still not going to work, right? Number of payments. But 6 shouldn't be right either. At the present value of 25,000. So what's the equal? Yeah, I'm not doing it right. Let's see. Bobby says the formula would be the principal times 1 over r to, 1 over to the n. Well, I'm not doing future value. Okay, I'm not doing future value. I mean, I didn't mean to do this today, and this should be super simple. there's something in my concept. I like to do the negative payment, by the way. So what is it actually trying to tell us, I guess? Let's do it that way. So 25K compounded by 6 would not be 175,000. Oh. Simple. I knew it would be something simple. I killed this. Whatever. That's months. 6%, I think, is the only thing I'm missing. I think it's just at 6%. I didn't format because I was just trying to be fast. And then this would be a number. What am I doing now? Compounded, if you were only doing 6% a year, that's what it's going to do. 6 periods, but I'm going to pretend they're months. I think this might actually work. So how much will we make every year? And it's a negative payment. Let's do it that way so it comes up positive. All right. So if you were doing 6, I think what it's saying is 6% of that, right? Per month. You're making, yeah, so I have to mess around with it. The part that's messing it up is the month. I don't want to get into it. Right? Right? I typically, so what I do, the periodicity that I use typically, like if I'm analyzing real estate, is I'm doing it monthly. I'm doing it annual cash flows, and this you'd have to do it monthly, compounded monthly. So in your first month, I think what it's telling you is you made $3,000 on your 25,000, and then you have to make a little more than 3,000, and then a little more than that, and then a little more of that, and then a little more of that, and at the end, it's going to compound, right? So, anyways, obviously I'm brain farting. So anyways, whatever. Not enough sleep. So yeah, I'd have to. I don't think I've ever done. I mean, I have done it. I just not in this class, so it would have been a while ago. I don't compound monthly generally, but anyways, it might be something for you to do. Like so something like that. Now I had a very, very sophisticated spreadsheet back in. So if I've been doing this 20 years, year 2003, year 2002. I guess it's probably closer to 2003. No, I did the negative in front of it. So back in 2003, I spent a whole weekend working on a spreadsheet like that. Yeah, I did that, Peter. I did that. And it looks like maybe there's a lag in YouTube, so you guys are still watching me do it, even though I stopped quite a while ago. So let me end with this then. I did spend probably 3 days working on very detailed pro forma cash flow analysis going out 3 or 4 or 5 years. And from that, I projected how much money I needed to start with, because remember, I had to like leave my job, right? Well, actually, I'd already done it. But anyways, so I looked at my capital, how much money I had in my account, and I projected out month by month for 3 years at minimum. It might have been 5 years. And I played around with how much leverage I'm using through the lot size, right, relative to the account size, and and my average number of pips. Okay, so I used pips, not a percentage return. But anyway, so I played around with it, and built it, hours and hours and hours and hours, and finally I got it. Okay. Oh, thank you, Daniel. 50 grand the first year, 100 grand the second year, 200, 400. Yeah, so this is what I did already, right? I wrote it out. But thanks for producing it. I appreciate it. Those are the exact numbers, right? So at least I'm saying like the numbers do add up. But anyway, so what I did with this analysis is I just defined how much risk I need to take to get where I wanted. And I started by putting in the input from what I'm actually doing. So I put in my account size, I put in the lot size, and then I let the math do the math. Because the lot size relative to the account size dictated the percentage return. So it was kind of like doing the same thing, just slightly different. And after 5 years, I had something like $100 billion. Okay. I wasn't trying to make $100 billion. So what it told me right away is one of my numbers was wrong. And that number turned out to be my lot size. I learned on that weekend, after hours and 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 hours, my lot size was too big. I was taking on too much risk. Okay? I was focused on the front end. Okay? Wealth comes at the back end. Wealth is about giving up something today in return for something in the future. Okay? If you give up $25,000 today and you make 6% a month on average, at the end of 5 years, you'll have more than $1.5 million. It's factual. If that seems like more than enough, in fact, maybe too much, cut your lot size. Because the risk here is not the math. The math works. The risk is you screw it up. The risk is your plus 6% a month goes to negative 6% per month. Right now, you're probably tolerate negative 6%. You're like, it's not even 10% of my account. Yeah, you're fired. Because here's what a client says. F you, give me my money back. Oh, but sir, it's only 8%. F you. Give me my money. Okay? So you need to focus on the consistency. Don't worry about the money. The math will take care of itself. That's the beautiful thing about money, is it takes care of itself. It does the work itself. It grows. It compounds. You need to be focused on the consistent, conservative returns, and over time, you will get paid. Now, the other part of that is, let's say you make 6% this month, but then you take out half of the profits. Well, then you only made 3%. And what did that cost you? So let's say, right? Let's say that 25 is 3,000. So you pay yourself $1,000 a month out of your trading account, but you're making 6% on your 25, so you're making 3, but then you're taking 1 out. So you're paying yourself 33% of your monthly gains. Do you understand this will cost you probably $1.2 million? This attitude of paying yourself 12 grand a year? Get a job. Be a pool boy. Be a masseuse. Walk people's dogs. Mow people's lawns. Doesn't matter. Don't touch the money in your trading account. Every drug dealer knows this to be true. You don't touch your stash. Why? Because you need to sell all your drugs to get cash, and then you need cash to buy more drugs so that you can sell more drugs to have more cash, so that you can have cash to buy more drugs. They all know this. It's simple business. You don't need an MBA to be a drug dealer, although it probably helps. Okay? So your pissy little $1,000 a month, you're like, oh, it's nothing. It's going to cost you $1 million in 5 years. Cool. So, I want you to seriously think about this. I just outlined how, right, with 6% a month, you're trying for 20. Cut that down. Break it down. If you have 25 grand and you make 6% a month, you'll be a millionaire in 5 years. But you have to have patience, discipline, and a ridiculous, sickening work ethic. And it's probably too hard and too difficult. It'll take too long. It's impossible. Then don't worry about it. Okay? Don't worry about it. It's too hard. Don't worry about it. 95% of people fail. Don't worry about it. Don't worry about it. It's cool. It's not your fault. Do the math. Then you're like, well, Wayne, that's ridiculous, 6% a month. Oh, then what's your number? See, when you're doing a comp rate, a discount rate, if you're all of this in finances, you make decisions. What is the opportunity cost? What does this money cost you? If you put the money in project A, you could have put the money in project B. So what would project B likely earn? You're like, well, I know I would earn 10%. Then project A has a discount rate at 10%. Why? Well, you don't know how much money you're actually going to make in project B, but you're pretty sure. You're like, yeah, I can put it there. I can buy some 10-year T-note. Well, that only pays 1%. Okay, I won't do that. Oh, I could buy the stock market, and I think the stock market will go up 10% next year. So I can put it in the stock market, and I'm pretty sure I'll make 10%. So the discount rate on project A is 10%. So your number's like, if you think 6% is impossible, which it may be, then great. What is your number? The point is you tell me what you can produce on average month after month after month after month, year after year after year after year. Find your number, put in the starting price, put in your number of how your rate of return, and put in how many years you're willing to do whatever it takes to produce that monthly average. You don't need more, because if you try too hard, you might end up with less. All you need is hit the damn target. If 3% is your number, hit the damn number, 3%. And then what? At the end of the period, the number will pop out exactly to the penny how much money will be in your account. And then you show what you did to someone with real money. Now you got yourself a career. Life-changing career. Legacy-changing career. If you can't do it, don't worry about it. It's too hard. I'll see you guys Monday, I guess. Have a wonderful weekend. Peace on earth. May the pips be with you. May our profits be above average. Sorry it was long-winded today. Lack of sleep. It always happens to me. I go from 5 minutes before the webinar. I want to quit. I want to sleep in. I don't want to get out of bed. Life's hard. I think I feel sick. I'm very tired. I have every excuse in the world not to do this. I can lie and say my internet went down, or my kids are sick, or something. Then I get on the mic and I'm like, I know I'm tired. I know I want to quit. I know I don't want to do this. But I'll give you 110%. So that's why it always goes weird, long-winded, because I gave you more than what I actually have. And now I'm going to go cry. Peace on earth. May the pips be with you. May our profit. I've clicked end stream like 4 times. Don't look at me. All right, YouTube won't end. I guess there's such a lag, huh? Oh, there it is. Are you sure you want to end the stream? The button still hasn't loaded. Amazing. Yes. Yes. When I clicked end stream, I meant end stream. I am sure I want to end stream. Have a wonderful weekend.